Good morning, good evening, wherever you may be, as applicable. My name is Ed Gutkowski, and as Brooke mentioned, I'm a senior application consultant here at GSI, and I'm also the chief architect of our RapidReconciler product, which we will discuss briefly towards the end of the presentation. Okay, so let's talk about inventory reconciliation and what it really means. So most companies that I talk to, they have inventory in some way, shape, or form, either at a manufacturing facility or distribution center. And inventory is, of course, the physical components out on the shelf, which periodically people will run cycle counts, they'll take physicals, all in the effort to get the proper value recorded on the general ledger. So the reconciliation process is the process of having an accurate recording of the worth of your inventory on your company's books. It's a pretty simple, straightforward process, okay? So the idea is accuracy. We want the value that can be calculated from the inventory system to match the actual account balance for inventory on the general ledger. So that's what a reconciliation process is. Now, the way most companies do this when they're using the JD Edwards software is they will run some type of trial or stock status report, whether they run the one that comes with JD Edwards, which is not very user-friendly, or they create their own so they can export the data more easily into Excel. It is an effort that is basically a snapshot, where at a certain time of the month, you will take a snapshot of all your items, how many are on hand, what the unit cost value is, multiply it out, get a number, okay? The next thing you do is you get your trial balance information out of the general ledger. So again, that's another report that can either be run directly out of JD Edwards, or more often than not, there's a custom version of that that will pull the account balances. So you have inventory data on one side, you have general ledger data on the other, and in order to marry them up to see if we're in balance or not, that usually involves some type of Excel work, where I'm downloading information onto Excel sheets, and I'm doing some type of manual calculation to see whether or not I'm in balance. Now, once you do that, that's where the frustration comes in, because the numbers rarely match, if ever. There is an out of balance. Sometimes it's tolerable, sometimes, but most of the time it is not. And now comes the pain of trying to figure out why these numbers don't match, where the problems occur, and what I have to do to fix them. Okay, so with that said, the main point of this particular webcast is to discuss the top 6 issues that cause reconciling items and what we can do to mitigate that. Okay, so here they are in no particular order. Okay, the first thing we're going to talk about are automatic accounting instructions. Okay, these are otherwise known as DMAIs, and they are the mappings between the inventory transactions you make in your JD Edwards system and the general ledger. So every time you do a PO receipt, a ship confirm, a back flush on a work order, all those types of transactions get recorded to the general ledger using automatic accounting instructions as a map in order to do that. GL class code control. This is one that most companies I talk to don't have a full grasp on what's going on with GL class codes. So I'm going to spend a little bit of time talking about that. Okay, product costing and how I can run integrity reports to validate that my costs are correct and I don't have a situation where my cost components don't add up to the standard. You know, those types of things, which can also cause variance. Okay. Do I have the right process controls in place? And these types of processes, these are just the back-end processes. We're going to talk about manufacturing accounting, we're going to talk about sales update, and we're going to talk about batch postings. Okay. Cardex integrity. Cardex integrity is an exercise where I need to take all of my transactions for an item in the item ledger, add them up, and make sure that they equal the balance that's on hand. So think of it almost like a checkbook for an item number. All my deposits and withdrawals must add up to the total. That doesn't always happen. And when we have math problems there, that leads to reconciling items. So we need to understand that in a little bit more detail. And then finally, how am I reporting inventory in the first place? Am I taking a snapshot at month end? You know, does the fact that I'm running inventory that way, does that inherently have issues? And what are my options as far as, you know, alternative choices than to take the snapshot? So we'll talk about that as well. Okay, so let's get right into it. The first one, DMAI, that's distribution, manufacturing, automatic accounting instructions. Okay, so the first two tips that we're going to say here are use what's called a model table concept, and I'm going to get into this in more detail in just a second. And then the other one is to limit wildcard use. Now, wildcards, if you're familiar with entering DMAIs on the JD Edwards screen, you know that there is a company number field that you populate, and there's a GL class code field that you populate. Now, in DMAIs, if you use company number 0, like you see there, then that means that entry will apply to all companies. Okay, so I don't have to say company 1, company 2, company 3. If I say company 0, it's a wild card. It means any company can use that particular entry. And the 4 asterisks are the same for the GL class code. So if I type in the 4 asterisks in the GL class code field, that means I don't care what the GL class code on the item is. I can still use this entry. It will still look for it and use it. Okay, so what we want to do is we want to limit the use of those. Now, it may sound good on the surface that, you know, this can save me a lot of typing by using the wildcards, and it can. There's no question about it. But what I find, what happens more often than not when you use it, transactions will process and they will make journal entries that you didn't really want. Okay, so I can set up my DMAIs in the beginning. I could come up with a new GL class code. If I don't specifically go into the DMAIs and make the right entries, it will use the wildcard entries, and the dollars may not end up in the account you want them in. So just keep that in mind. If you're in the habit of just automatically using these wildcards, you really should think twice about that. Okay, they do have a use in certain instances, but again, I would recommend that we minimize the use of those. Okay, so now back to the model table concept. Now, what I consider a model table is we take one of the DMAI tables. So the chart that you're seeing here, which looks a little bit busy, I understand that, is just a listing of all the different DMAI tables that JD Edwards uses when inventory transactions are performed. So for example, if I'm doing a work order completion, it's going to use DMAI 3130 for the inventory side of this. Okay? So again, 3130s for inventory. All the ones you see that are in these green blocks are the inventory side of the transaction. So they're the balance sheet side. So if I'm doing a work order completion, I am going to debit finished goods. I'm going to credit work in process, right? So there are 2 tables involved. So every transaction that you do in JD Edwards invokes 2 or more DMAI tables in order to create the journal entries. Okay. What our focus here is just on one side of that transaction, and that is the inventory side. Okay. So if I look at, and what I like to use as a model table is the cycle count table. So I'll go into the 4152 PI and let's do a dump of that onto an Excel sheet. And in there, what you will see is you'll see a list of all the companies, all the GL class codes, and all the accounts, the inventory accounts that are associated with that. Now, if we consider that a model, what we should be able to do now is to take the entries that are in this one table and compare them to all these other tables. And they should match exactly, with rare exceptions. Okay? Nothing in life is perfect, but 99% of the entries in these other tables should match what's in the model. So once you vet out one table, Now you have the opportunity to go compare it to the rest of the tables and then make sure that they line up. This in and of itself will prevent a lot of reconciling items from occurring. Okay. What you'll find is you will find differences, and those differences need to be corrected. Okay, so that's one thing that we can do. So first tip, DMAIs. DMAIs are probably the biggest contributor to reconciling items in inventory. Let's make sure that they're correct so that we can mitigate that. Okay, the second item is GL class code changes. Okay, so it's important to understand where GL class codes live in the system. So we want consistency on all the levels. Well, what are those levels? Okay, so if I enter a new item into JD Edwards, the first thing that I'm doing is I'm creating what's called an item master. So I enter the item, I enter all this information about the item, and one of the fields that I put on there is the GL class code. And let's just say, for the sake of argument, that I'm entering a finished goods item. So I create the item master. Now the next thing I do is I enter the branch plant information. So the item master just says, okay, I have an item in my system. The branch plant now says, where are all the physical locations where I store this? You know, what branch plants do I actually put this item in? So now I take a copy of the item master record and I clone it down to each branch plant. So let's say I enter one item and that item is held in inventory in 2 different branch plants. I create the branch plant records. Now in the system, that GL class code lives in 3 places. So I have 1 record in the item master, 2 records, 1 for each branch plant. Okay, and it will become apparent why I'm pointing this out in just a minute. Okay, level 3 now means that inside of each branch plant, we can have shelf locations, or we can have items with lot numbers. And in JD Edwards, that is a different data table. So I have an item, I can have it in branch plant A. Within branch plant A, I could have it on shelf number 100. Okay, so that's a location. Every location that's set up within the branch plant gets a copy of the GL class code. So now if I had 2 locations in each branch for the 1 item, now in the database, I have 1 in the item master, 2 in the branches, right? And then 4 in the locations. So now I'm up to a total of 7 places where that GL class code lives. And that's before we even get to the 4th level, because if it's a finished goods item, it's going to be on a sales order. Well, if I have 10 sales orders for that item, guess what? I have 10 lines and 10 more places where that GL class code lives. Now I have 17 places where the GL class code is. Now, if the item is a finished good item, I should have consistency on all the levels, and I will in the beginning. Okay, so if I set it up with, let's just say GL class code FG01, it's finished good, I copy it down, it's going to be FG01 here, it's going to be FG01 on all the locations and lots, and on the sales orders, it'll be FG01 on all the 10 lines of the sales order. Perfect. So here we are sitting there, and we decide, ooh, wait a minute, this really isn't an FG01, it's actually a raw material. I need to change the GL class code. Okay, how do I do that? Well, in JD Edwards, it will let you just go into an item master screen or a branch plant screen or any one of these screens, and you can just type over it, okay? And you can change it. Most people don't know about the 4 levels, okay? And you also don't know that there is a process to follow that Edwards does not enforce. Okay, so here would be the process. The first thing that you should do whenever you're going to make a GL class code change, especially one that reclassifies the dollars, right? You're going to want to adjust the on-hand quantity to 0. Now, why do we have to do that? And you're going to do this before you change the GL class code. Okay. Now, why do I need to do this? Well, let's say that we had that item initially set up as a finished goods and it was worth $100. Well, when I'm done processing, all of the dollars for this, $100, is in the finished goods account. Well, now I have to change it to raw materials, okay? If I go and just change the GL class codes, changing a GL class codes will not drive a journal entry. So I can certainly change the GL class code to raw materials, but the dollars will still live in the finished goods account. They will not move, okay? If I adjust the on hand to 0, I will do a credit to the finished goods account for $100 and put it the other side into a holding account. Then I can change the GL class code from finished goods to raw material on all the levels. And then I adjust the on hand quantity back under the new GL class code. And then I will credit the holding account and I will debit the raw material account. Now everything is lined up, okay? So you can see just changing a GL class code can cause a reconciliation problem that you will not be able to chase down via transaction, right? Because there was no inventory transaction that took place, okay? It's just changing a GL class code. So again, this is an awareness session. Changing a GL class code has a process that you should follow, okay? Most companies aren't aware of that. Okay, let's move on. Issue number 3, product costing. There are some integrity reports that you can run to make sure, especially if you're using a standard cost system, okay? First, the ledger component integrity. There is a report inside of JD Edwards that you can run. It's 30543. Now, what this does is it's going to take all of the cost components of your items and add up the A1s, B1, C1, D1, whatever you have for components, get a sum total, and it's going to compare it to what the standard is, okay? Now, once you do that, right, the sum of the parts must equal the whole. If it doesn't, it's going to cause a reconciling item, right? So we need to make sure that we have integrity in our costing system, and there is an integrity report that you can run to ensure that. The second thing is WIP revaluation. Now, WIP revaluation has been around for a couple years now, but it hasn't been around all that long, right? So it's a fairly recent feature that has been added in JD Edwards, and there is a WIP revaluation report that you can run. Okay, so why do I need to do this? Well, if I go ahead and I update my standard, so let's just say I do a cost roll in a standard cost system, and I update all my costs. Well, if I have work orders that are out there with material issued to them and have not been completed after the cost roll has been done, then what will happen is these will all have old costs on them, right? So once I start issuing material to the work order, right, because as soon as I attach the parts list, it takes a copy of the costs that were in place at the time, okay? So I have the old cost sitting out there on the work order. Now I issue material to it. Well, when I do that material issue, it's going to record in the inventory system at the new cost. When I finish the work order and I run manufacturing accounting, it's using the cost from the work order system, which is the old cost. So now you're going to get variances as the difference between the old cost and the new cost, right? If you run a WIP revaluation after you do your cost roll, that's what goes out and updates all the work orders out on the floor so that that variance gets eliminated. Okay, so if you're running manufacturing and you did not know that WIP revaluation should be part of your cost roll process, now you do. Okay, so please keep that in mind. It's a very, very important part of the costing system. Okay. Another thing that I have seen, and it can cause issues, is something called multiple cost problem. So in JD Edwards, in the cost table, you have, or can have, many different methods. So you can have an item that has an 01 last in cost, an 02 average cost, an 07 standard cost, an 08 purchase cost. And in the data behind the scenes, those costs get flagged, like which one of the 5 or 6 different cost methods do I use to value inventory? Which one do I use to value the purchase cost, right? So there are flags that are set. Every once in a while, we run across a situation where I have more than one of those cost methods flagged as the inventory cost. Now, you can't see it on an Edwards screen, but if you go query it, if you go look for the costing method, you might find that you'll see an error on the screen when you try to query the cost. Okay, a way to detect those, since there is no standard report to look for this, okay, here's an example of an SQL query that can actually find that. So if you request a copy of the presentation, or I think you're going to get a link to a recording of this at the end, you'll be able to get this statement and you can check your system to see if this condition applies to you. Okay. Now you can fix that through the screens by going into the costing screen where you see the 07 cost for sales and the 08 for purchasing on that screen. If there's a duplicate that shows up on the report, if you go into the screen for that item, you change that particular cost method to something else, and then you change it right back, then the duplication will go away. So having duplicate cost methods flagged can mess up an inventory report if you're running a standard, or standard snapshot. So you just want to make sure that you're not overinflating your inventory number because there's bad data behind the scenes. Okay, so there are things you can do about the product costing. Okay, now we have our first poll question, and let me see. Okay, so our first poll question. Now, of the three things that we just talked about, what I want to put out to you guys is which one of them are you having the most trouble with, do you think? Do you think it's the DMAIs, the geo class codes, you're having too much variance in manufacturing, or everything's going just fine? So let me turn the polling on for that. And so for question one, if you guys could go ahead and select which one is the most applicable to you. We'll give it a few seconds here and see what is happening. Okay, so just answer to the first poll question. We'll get to the second one in a little bit.
So it's not, I see it's not letting us submit the first one to answer. It's requiring us to do the first and the second before we press submit. I'm trying to see. Let's see if there's a way I can fix that.
Okay, well, I wouldn't worry too much about it, Brooke. I'm just going to give it a few more seconds and then we'll move on.
Okay, yeah, and then I think once you do the second one, then everybody can submit it and then we should be able to see the responses.
Okay.
Sorry about that.
That's all right. Okay, so guys, just so you know, this is our first go at using a Zoom meeting. We usually want to go to webinar, so we're still kind of learning a couple of the details here, so bear with us. Okay, so now that I look at this, let me end the polling. And if I look at the answers to the first question, okay, I'm getting a fairly even split among three of them. The one that I don't have really much input on at all is the geo class codes. So looks like everybody's running their geo class codes okay. There's a lot of you that are running good, and a few with DMAIs, and some with manufacturing variants. So it's a pretty even split amongst those other three. It's very, very interesting. Okay, let's move on. All right, so the fourth thing that we want to talk about is the control of the back-end processes. Okay, so we're going to talk a little bit about manufacturing accounting, a little bit about sales order processing, and then the GL batch postings. Okay, so the first thing we're going to talk about is manufacturing accounting. Now, with manufacturing accounting, I'm sure you guys know, if you are running manufacturing, that this is the job that picks up all the work order activity throughout the day and generates the journal entries that represent all of that activity. Okay, so work order transactions are unlike PO receipts, where PO receipts are interactive and they create their journal entries at the moment that you do the transaction. So if I do a PO receipt, 1 second later, after the receipt transaction is done, there is an entry in the general ledger that has recorded that. That is not the case for work orders. So any material issue, work order completion, back flush, pre-flush, any of that stuff that happens all day long, the GL knows nothing about it, okay? Until we run our manufacturing accounting job each night or however often you run it. Now, what's important to understand about this, there needs to be two different versions of this, okay? One is for partial completions. That's the first one. And the difference between the two is basically changing the status code on the work order. Okay, so a typical status flow is I create a work order header, that's like status 10. I attach a parts list, that's status 20 or something, and I start issuing material, that moves it to status 40. There's a status flow to that. Now, if I have a work order, and the only thing I've done is I've manually issued material to it, of course this work order is not complete because I haven't completed anything yet. I've just manually issued something to a work order, let's say 3 o'clock in the afternoon. Okay. Now, when manufacturing accounting runs at night, we still need to book that entry for that material that was issued. We want to create it the same day that it actually happened. That's why you need this partial version, okay? And more often than not, when I talk to people, this is the version that's missing. They will have the full version that says, oh, when this work order has been fully completed and the status gets bumped, now I'll do the accounting for it, okay? But we can't have work order transactions out there for weeks on end that never get booked to the GL, right? So if the cycle time on a work order, let's say is 2-3 weeks, maybe a month it takes you to complete the end assembly, okay? We need to book those partials all during the month to keep the GL up to date, okay? So the difference between the two, one says bump the status from 40 to 90 so I can actually, run the accounting. And the other one says, well, account for the stuff that's happened, but don't change the status because this work order hasn't been completed yet. So we need to make sure both those things are in place. Otherwise, we're going to have reconciling items, right? We're going to have transactions that have affected my on-hand balance that would show up in a snapshot report. If I issued material, that inventory is gone. The quantities are gone out of the system, okay? But if I don't have the corresponding journal entry, there's a reconciling item there. So we want to make sure that we get those entries created as close to the actual transaction time-wise as we can. That's why there needs to be two versions. Okay. Same with sales orders. Okay. Now, sales orders, the way they get processed, there are several steps. So I enter a sales order for a customer. I get a pick request, so I have to go down and pick it. I have to go into the system and ship confirm it to say, okay, it's on its way. I may then have to produce a bill of lading. I may have to send an advance ship notice. And there could be other steps that are involved before eventually it gets to the status that sales update will pick it up, okay? So what we want to know at any given moment is what sales orders are at what stage of the pipeline, especially after they've been ship confirmed, right? Because as soon as I ship confirm something, my inventory gets decremented. Well, if it takes 3 days to run through the rest of the steps before it actually hits sales update, that's a reconciling item because my GL has not recorded the fact that I ship confirmed that inventory 3 days ago, right? So in between there, now my inventory, I can't count it correctly, or I can't value it correctly. So we want to make sure that we can account for that. And so there should be a report, and you would have to generate this, because I don't believe there is one in JD Edwards out of the box that will say, okay, here's all my sales orders at these given statuses. Now, do they need to be there, or do we have to go do something to move them along in the process? Okay, so we're going to need reporting for that. And then when we talk about sales update, there has to be multiple versions of it, right? There is a different version, let's say, for a transfer order than there would be for a customer order, right? A transfer order, let's say between branch A and branch B, would not require an invoice, whereas a shipment to an outside customer would require an invoice. And those invoicing pieces are options inside the versions, whether I create AR or don't create AR. So another thing to be cognizant of is you need multiple versions of sales update, and they should be set with their data selection according to the order types that they are intended to process. So again, some other control tips for your back-end process. And then finally, for this one, we're going to talk about the GL batches. Okay, GL batches are typically handled pretty well. The accounting folks know what they're doing as far as that is concerned, but I still need to bring it up because it still can be a contributing factor to the reconciliation process. So recommendations as far as GL batch postings are concerned, we should auto approve and post wherever possible, right? So if I'm creating a batch out there, you know, set your system up so that those batches will auto approve and auto post wherever possible, okay? So if you're set to manually approve and manually post, and you find that you never actually reject anything, so you just look at them and automatically just pass, and why not have the system do it automatically and save you the work, okay? And the second piece about that is missing batch headers, which happens from time to time in JD Edwards. So if you go on that batch posting screen and you get a list of all the batches that need to be posted, well, if the header's missing, guess what? It doesn't show up on that screen. And unless you have some kind of report, you will never know that there's batches out there that are missing the header, okay? So in JD Edwards, they have a canned report for this that will tell you all of the batches that are missing headers. And even inside the processing options of that program, there is an option that says rebuild them for me automatically, which is wonderful. Now, if you take that report and throw it on the job scheduler right before you run your batch postings, then the missing header issue that's in JD Edwards is no longer an issue, because we will rebuild all the missing headers automatically before we run the batch posting programs. So another tip that will save you some grief and make the reconciliation process that's much more smooth. Okay, let's talk about managing the cardex and cardex integrity. Now, a lot of things that, or some things that people don't know about the cardex is that these numbers on top, this quantity on hand, and this value that you see circled here does not come from summarizing all the transactions in the item ledger. These balances come from a different table. Okay, so they come from 41021, the quantity does. The unit cost comes from 4105. So when you're querying this item ledger screen and you're putting your item number in here and hitting find, okay, these numbers are being fetched from somewhere else. They are not being calculated on the fly, okay? So the amounts that do show up in the details, if you were to export these to Excel and you summarize the quantities, the sum of the quantities on the transaction should equal the quantity on hand. The sum of the extended amount of all the transactions should equal the value, but they don't always, right? They do not. Sometimes what happens in JD Edwards is I run a transaction, let's say I run this inventory adjustment, and let's just say it was for 10 units. So I adjust in 10, but because something behind the scenes got blocked in the system, my quantity on hand never went up by 10. So I still see the transaction, but the quantity never got added in. So I could have a discrepancy, okay? If I have that discrepancy and I'm running a snapshot report, well, all of a sudden my snapshot, which uses these numbers here, it doesn't really agree with what's down here in the details. But you know what does agree with what's in the details? The general ledger, okay? So let's just say that was 10 units, and let's just say the value was $1 each for those 10 units, right? It never got updated here, right? But it did get updated here, and that $10 went to the general ledger. So what happens when you run your snapshot? Now I'm 10 units short, I'm $10 short, and I'm comparing it to a general ledger where the $10 is there. So what are you gonna do? You're gonna write off the $10 from the general ledger? That's not the right corrective action for this scenario. So we should analyze, we should have a process that summarizes the transactions, bounces them off the balance to make sure that the math works and that everything adds up. Okay, this is not something that's done very regularly in most companies that I talk to. Okay, so, and trust me, if you've done enough transactions in your system over the years, you have this problem, okay? It is there. It's rare, but it does happen. But most companies will have at least one example where that has hurt them. So just, again, be aware of that and have a process of managing your cardex. Okay, and the last issue that we'll talk about is getting an inventory report out of your system in the first place. Okay, how do I write this report? You know, what information should I be pulling and when should I be pulling it? Well, we really have two ways of going about this. Okay, the first way is what I'll call a balance-based report. And this is what most companies will do because it's the easiest thing to do. And what that is I'll take that snapshot at period end where I find the quantity on hand, I get the unit cost, I do the math, and I come up with a number, okay? Now, what are some of the pitfalls of doing it this way? Well, in order to do that, right, I have to pretty much stop transacting, right? If I'm going to compare this to a GL balance, right, and I have 24/7 operations, when do I do this? Do I have to kick everybody off the system? Do I need downtime, right, so I can get a quiet period ending balance? Yeah, you kind of sort of do, right? If you're taking it while transactions are occurring, you really don't have much of a chance of getting that to match up to the general ledger, okay? And also, now, there's an issue if I start backdating transactions, right? Let's say I do something on day 2 of the month, and let's say I'm gonna run manufacturing accounting for a work order that got held up. The work order was in September, now we're in October, you know, the inventory moved in September. I gotta backdate this to September because I really need that balance to be reflected in that September number. Well, if I ran my snapshot already, and then I backdate it, well, my snapshot is no good, and I can't reproduce that snapshot anymore. Snapshot is a one-stop shop. Once you take it, you're done, okay? Because the inventory will be constantly changing as soon as you start producing it again. All right, so there are inherent problems with using a balance-based approach to writing an inventory report. Now, the second way you can do it is something that's called transaction-based. And the transaction-based, some of the benefits of this is you can run a transaction-based inventory report anytime, and the numbers aren't going to change for prior periods, right? Or if you backdate something, they will change accordingly, right? Because you're intentionally putting a transaction back in time, right? So the good thing about transaction-based is you can control it. You can put a date stamp on a transaction. You cannot put a date stamp on a balance. A balance is what it is at the time. Okay, so here, once you use a transaction-based report, you can run that anytime you want. Okay, you don't have to stop transacting. Okay, you can just keep going. You don't have to shut the system down and kick people off. Okay, so, and the thing is, so the big question is, well, how can I run a transaction-based report? Okay, with all this inventory data in the system, how do I do that? So we're going to show you a few things now, right after this poll question. Okay, so the poll questions, I'm going to relaunch the poll. So Brick, you might need to, oh, there it is. Okay. Showed up on my other screen, confused me for a second. Okay, so which of the following did you not know before this webcast? Okay, the sales order and work orders, pipelines must be monitored, cardex integrity is important, right? And transaction-based inventory is the most accurate method. Okay, so if we could, start selecting on poll question 2, that would be great. And I'll give it a 30 seconds or so, and then we'll move on. Right at the moment, it looks like we have a clear winner. Okay, it's not much changes now, so let me end this. And our winner is the sales order and work order pipelines must be monitored. Well, good. I'm glad that we've learned something this afternoon. Okay, it's not very difficult to do to set up those reports, and it's a good thing to know. So now you can take that back to your company and get that inventory process cleaned up a little bit more. Excellent, guys. Excellent. Okay, now what I want to do, and I'm going to do this very quickly, is I'm going to introduce you to our RapidReconciler product. And what this is it's a product that's been Oracle validated, and we've designed it specifically for JD Edwards, and it is a reconciliation tool. And what you're going to see in a second here is that all these things that we were talking about today, from DMAIs and model tables and GL class codes and cost integrity and pipelines and all this stuff, are all taken care of in one place, in one product for your system. So you don't need multiple reports, and you don't need a lot of the noise that comes along with a reconciliation process. So the benefits of using it, right? We have integrity reports built in that will show you those mismatched DMAIs as compared to a model table. We'll show you the different levels where your geo class codes don't match up. And if you have these frozen cost variances or multiple costs, so that's all built in. Okay, we have the back-end process reporting. You'll see the work orders that haven't made it through manufacturing, or the sales orders that haven't made it through sales update. You'll see anything that's unposted, and it will tell you if it's missing a header or not. So all these things that we've talked about, right? And the inventory perpetual number that we're reporting to you is a transaction-based report. So we calculate it ourselves. We do not use the JD Edwards as of, because over the years we have found that process to be not reliable. Okay, so just keep all of that in mind. That's the reason that we're introducing this to you. And now what I'd like to do is just a real quick demonstration on what it looks like. Okay, so right here, what you're seeing is our web interface. This is inventory reconciliation with some test data. Okay, so what you're seeing here is we have data for 2 companies. These are companies within JD Edwards. Here's all the inventory business units, objects, and subsidiaries we pulled from the model table. So that cycle count table, 4152 PI, this is what's in there. This is your inventory, okay? So for everything that we have selected, we have a GL balance. We have a perpetual balance. That is a transaction-based number that can be matched up to the GL. And you can see in this case, it matches perfectly, okay? We have any GL batches that aren't posted. End of day means work orders or sales orders, okay, that are in process, that need to be worked on in order to push through their pipelines to get them to the GL. We show you any transactions that don't book to the GL because of DMAI issues or other issues. Okay, we do that cardex monitoring to make sure every item's transactions add up to the balance. Okay, and then we also show you manual journal entries. So when you correct things, you correct these variances, we offset it, with a manual entry, and we keep things back in order, okay? Also in this product, we have those integrity reports I was referring to. Like for example, here's the model table, the 4152. Here's the company numbers, here's the geo classes, here's the balance sheet accounts that are associated with them. Once we have this model all vetted out, and we do this with, as part of our setup with the user community, then we can run our DMAI report that says, oh, now we're comparing all these other tables to the model, and we have all these mismatches. Why does the object account mismatch here? Why does the subsidiary mismatch here? Okay, so now we have a listing that we can go through, and we can say, okay, is this the way the DMAI should be set up? Yes or no? And more often than not, we find a population of DMAIs that are not correct, and we can go and fix them. So we have a list, okay? Things like GL class codes where they have a consistency issue, right, between the location and the branch. So here are the items, here are the branches. Okay, on the branch, it's an NS40, but in the location, it's SECB. Well, which one is it, right? Which one is it? Is it a non-stock or is it a production part? If you have a setup like this, believe it or not, this will drive manufacturing variance. Okay, this will drive manufacturing variance. Okay, frozen cost integrity. Here's where the frozen cost doesn't equal the standard. So the sum of the parts don't equal the whole. So we need to re-roll these items, right? So it's all built in, and you can see how quick I can get to these. Okay, clean cutoff. Am I running my jobs at the right time of night? Okay, so I have all these work order transactions that actually book in a different period, right, in the GL than when the inventory actually happened. Okay, so there's a difference in the periods. So these are these kind of cross periods, right? So I really need to accrue for this stuff, right? Whereas if I had a cleaner manufacturing process, I have the means to eliminate this process and less items to reconcile. Okay, so we have built-in integrity reports. We have a full as of. Okay, so I can come in here, I can get a full listing of every single item, branch, location, lot with all kinds of supplemental information on here. Okay, so here's all the details, and I can just, let me just fold this up for a minute. Okay, so I can see all these different items that have all the different information on them. We have material, labor, overhead, amount, and everything on a grid here you can export to Excel. Okay, I can get a daily as of. So if I get here within the period that I have selected up top, I can get an inventory for every single day during that period. So there's a lot of features. This is a very feature-rich product. Okay, so a lot of the things that we were talking about, let me just do something here real quick. I'm going to switch databases, and I want to show you something. So I'm going to show you some details where we have some numbers here. So GL batches, okay? Here's a whole bunch of batches that are approved but not posted, right? So now I can get a list of all the batches that I need to work on, or that I can send over to finance and have them work on, right? So I need to clear this up before I can actually do a reconciliation. So here's my end of day. So you can see I have sales orders in here. I can see they're at 620s. These are at 575. Some are at 570. So now I can work on these to get these orders processed before I close the period. Okay, so all these details are drillable and available to you. So the pipeline's being monitored, the transactions are being monitored. I can get a detailed list of all the transactions that fail. I can sort them, filter them. I can drill into details by hitting the plus sign. And I can get all my item numbers and such that are associated with these transactions. So this is a very robust product. It gives you all the information you need to do a full and complete reconciliation. All the data's together. You don't have to ask IT to run a bunch of different reports. Everything is right here for you. Okay, so I wanted just to take a few minutes to show you that, right, to kind of close out the presentation. So thank you very much for that. So with that, Brooke, let me turn it back over to you. Brooke, are you there?
Sorry, Ed, my screen keeps freezing. Can you hear me?
Now I can, yes.
Okay, awesome. So sorry about that. Let me share my screen really quick.
Okay.
Oh, sorry, I'm having lots of issues. Sorry. Okay. All right. Well, thank you so much, Ed. That was great. I just wanted to share this next screen, and I'll let you talk to this.
Okay. So thank you once again, guys, for sitting through the presentation. I know we kind of tossed a lot of information at you in a hurry, but I did introduce you to RapidReconciler, and just to kind of finish that up, what I wanted to do is throw this offer out there for what's something called a proof of concept. And what a proof of concept is we request some data from you, right? So we would work with your IT department, get a sample set of data out of JD Edwards, run it through our process, and present the findings back to you. So if you wanted like a quick view of what RapidReconciler can do for you, that would be a proof of concept. So you get to see it in action with your data. So the offer that we're going to make is, for the first 5 who sign up through November, right? We would only charge $1,000 for the proof of concept. What you can see normally it's a $3,500 service. And for the first 5 who sign up, you will personally get a $250 Amazon gift card. Okay, so what we're after here is, right, we think that we can help you if you're having inventory reconciliation issues. We can certainly help you, but we would like to, extend that offer, let you see the product with your own data in it so that you can see the value there and we can move forward from there. So I just wanted to make sure that you guys were aware of that.
Awesome. Thank you so much. All right, now we're going to get into our questions and answers. I just wanted to let you know that after the presentation, there will be a survey. If you complete the survey, you'll be able to be entered to win a $25 Amazon gift card. All right, let me pull up the questions.
Now, guys, I think that there is a question panel in Zoom on the side where you can actually key in some questions if you have them.
Okay, so the first question we have is, what happens if we don't follow the GL class code change process?
Okay, so we did talk about GL class code changes, and the process was, remember, to zero the inventory out, then change your GL class code, and then adjust it back in. So let's just say the process you decided to implement was, I'm just going to go into the item master or item branch, and I'm just going to change the GL class code there. Yeah, so what about the dollars? Well, a couple of things will happen. Number one is you will be out of balance between the 2 accounts, the 2 balance sheet accounts. So it's only a balance sheet to balance sheet discrepancy. It won't hurt you as far as, if you roll up your total inventory, it's not going to make a difference. But if you have separate accounts, I'm certain you would want those separate accounts to be in balance. So that's one thing. The second thing is, from a pure inventory point of view in the item ledger, I want to have transactions in the item ledger that represent the activity that's going on. So for example, if we had that item that was set as a finished good, and let's just say I purchased some on an OV, right, on a receipt, and I brought them in and they were for $100, and that $100 is in the raw material account, and then I decided to change it to a finished good. Okay, well, within the cardex, forget the general ledger, just within the cardex in the inventory system, I would like to see the OV for raw materials, an IA to adjust it under the raw material GL class code. That way, if I sum up the GL class code entries, the raw materials, it comes to 0 before I change it over, right, to a finished good. Then I adjust it back and I just see another IA for finished goods. Now everything is good. The GL's good, the inventory system's true, everything is accurate and lines up. If you don't do that, what will happen is you'll have an entry in your item ledger for an OV, and then your issue will be under FG, and even the integrity of your cardex is off, okay? So you'll have a plus 100 for raw materials, a minus 100 for finished goods. Yes, it will net to 0, but when you try to roll up these transactions by GL class code, they just will not add up. So it is important to follow the process. I know it's difficult to do at times, but that's what will happen if you don't. So be aware of that.
All right, I think we might have time to finish the last 2 questions, but we'll just go into the next one and see how far we get. Our next question says, doesn't JD Edwards have an inventory as of table?
Yes, it does. The problem with it is, a lot of companies don't use it, so they don't turn on the nightly process. If they do turn on the nightly process, what they'll find out is it's very time consuming. So it's resource intensive as far as data processing is concerned. And then lastly, and most importantly, is over time, there are inevitable integrity problems with it. Okay, so unless you manage that table, and there are screens in Edwards that you can manage the as of table with it, but unless you're doing that, running their integrity reports and then doing all these manual entries on screens, the underlying data won't be accurate. So it does have a table. We find it not to be very accurate, so we build our own.
Okay, great, thank you. And then the last question we have is, how do I find out more information about RapidReconciler?
Okay, so in order to, if you are interested and it is something that you want to learn more about, just either drop me a note or you can certainly email Brooke, and we will set you up with a call or whatever to get you the information that you need.
Awesome. Well, we just want to thank you, Ed, for your presentation today and everybody for attending. We just wanted to I just reminded you guys about the Amazon gift card, and there will be a copy of the presentation and a recording available on our website. And again, we want to thank you, and we hope that you have a great rest of your day. Thanks, Ed.
Thanks.